Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to have a little chat about Trump TV, or in the best words of it, reality TV, and the impact it's having on the market. Plus, there is rising concerns that we're nowhere close to seeing any type of trade deal. Plus, Carney goes to the White House. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. With that out the way, let's get started. So, yes, I mean, I know he started off obviously as a successful property tycoon, apparently, and then of course reality TV. But recently, the whole thing sort of comes to mind that in many ways, Trump 2.0 is really like watching a reality TV program, because we have had so many twists and turns, so many changing in opinion, so many sudden decisions where we looked like he was going to go this way, then he went that way. And then, little funny things like what he said about dolls the other day. The little girls could, they can put up with only having 3 dolls instead of 30. Because obviously dolls are going to apparently get more expensive. Well, he's admitted dolls are going to get more expensive. But this sort of thing, it is really, it is a bit like that. But here's the problem. The implications of this on the market is massive, because don't forget, the S&P 500 has had its best or longest, shall I say, winning streak, in over 20 years, since November 2004, as you can see in this little picture here. An amazing streak, a great comeback in many ways, as it was, and the market in general was, under so much pressure because of Liberation Day. Then after that, the 9th of April, which we've discussed, in the monthly recap video we did last week, 9th of April, he came out and said, okay, going to do a 90-day, I'm going to delay tariffs for 90 days. Plus, we're open to trade deal with China, So then there was hope of, potentially a trade deal between the US and China. And then he started talking about, all these trade deals are coming. Everybody's coming, knocking on my door to make deals. So we all started to feel a little bit more confident. The market got a bit of a boost. However, 2 comments. That's all it took. It was 2 comments. First comment. Trump announced he was going to put 100% tariffs on films made outside the United States because Hollywood was dying fast. And then number two, he said he had no plans to talk to the Chinese president about a trade deal this week. So the hope of us reaching a trade deal is starting to disappear. So now, after the longest winning streak in 20 years, it's rotten tomatoes. It's rotten tomatoes for the market. Because as you might have guessed, the market, once again, is under slight pressure. And it doesn't stop there. Oh, no. Today, Trump has announced that he's going to put tariffs on pharmaceuticals over the next 2 weeks. And as well as that, reality has started to kick in because the US trade deficit is widened to a record high. And don't forget the whole point of these tariffs. Whole point of this, what Trump wanted to do, was to reduce US trade deficit. You remember the time he brought out that board? That board was, all those percentages, was based on trade deficits, not tariffs that countries were charging the United States, which he claimed. But anyway, that's what it was. So this whole attempt of getting the trade deficit less is doing the opposite effect. It's gone to a record high because the trade gap was announced for February. It's jumped up by 14% to a record 140.5 billion from the revised number of 123.2 billion in February. Now, there is good reason for this, and it's a simple explanation why this has happened. It's simple. Because of all this trade talk, because of all the tariffs, businesses have rushed to buy goods before higher costs kick in. And don't forget, as we discussed last week, this has impacted US GDP, which was the lowest or contracted for the first time since 2022. It came in at negative 0.3%. Because of this, because everybody's rushing out to get goods because of tariffs. So it's doing the opposite effect at the moment. The happy feeling of the market is slowly disappearing. Okay. And like I say, it is potentially great reality TV, but it is really causing, chucking rotten tomatoes at the market. Now, before I go on to the next thing, I want to go on over one other thing, actually, which has also occurred today. And that is basically, again, this is what put in a sour taste in the market's mouth. The EU is standing by to act because, don't forget, they have quite a fair bit of tariffs against them from the US. In fact, they've announced plans to hit about $113 billion worth of US goods with additional tariffs if trade talks fail. So not only, like I say, China's reacted, as we already know. They've put 125% on US goods. Now the EU is planning to do so. But this is what's sort of worrying me a little bit. And I think it's, like I say, it's beginning to spook the market. Why did the EU have to come out and say that? If trade talks were continuing, or indeed trade talks were happening, like Trump tends to claim. I mean, he hasn't said who he's having trade talks with, apart from Japan. He's mentioned, but who else is he having trade talks with? We're not 100% sure. So the fact that the EU has come out and say, look, we're getting ready to retaliate as well if we don't get to a conclusion on these trade talks, is making the market sort of feel maybe the talk, or the Trump administration's talk about trade talks occurring or trade talks about to happen isn't really the case, and we are in fact nowhere closer to getting this, getting an end to this trade war. We're nowhere closer. But anyway, let's have a quick look at the markets to see how they stand. Okay. So start off obviously with the S&P. Okay, it is trading negative today. Again, like I said, it is under slight pressure. It's not, it's not like the massive moves we've seen over the last couple of weeks. But again, it has come negative because of these trade concerns once again. And then we can say the same about NASDAQ as well. That is also negative for the day as well. I guess they opened with, a gap because the market's been open now for just under an hour. And if we can have a look at some of the Mag 7, Tesla is down but as well, so the tech companies are getting hit. Actually, Tesla, their sales figure in the UK dropped down to 62%, which is a record low for them. So they got their own concerns as well. On a side note, Meta under pressure, negative 1.2%. Microsoft, negative 0.54%. Amazon, okay, plus they're the only ones doing okay today. Alphabet, negative 0.39%. Nvidia, negative 99%, 0.99%. Actually, God, imagine if it was negative 99%. It's not, it's negative 0.99%. And Apple, slightly up. But yeah, but we can also see the dollar is getting hit as well by this. So don't forget, last week, the dollar was enjoying its best bull run in several weeks. No, not the case now. Again, under pressure again, because going wrong with the markets because of these concerns, also under pressure. As you can see, the dollar index is down 0.41%. And you can see this with the euro sort of pushing a little bit higher, and the sterling. And of course, when there's uncertainty, when there's concern, we all know what benefits, and it's my program, and I always talk about this every day. And that, of course, is gold. Up higher again, trading at $3,392.73. As we can see over the last couple of trading days as well. You know, it has got again since those comments about the movie industry, okay, and doubts now on trade deals occurring, it's managed to bounce back. Before that, it had several days of it being sold off as the market was happy and there was much rejoicing, but that happy feeling is slowly fading at the moment. One other thing I want to discuss as well is two more things, actually, I wanted to mention. And hopefully maybe this actually could give us a little bit of light on whether or not trade talks are happening and if we're anywhere close to getting a conclusion with these trade talks. Because Mark Carney, you know, the new Canadian Prime Minister, he heads off to the White House today. And there is hope that, well, you know, he will be. He was going to meet Donald Trump today to discuss trade and security. So that might, depending on how that goes, that meeting between those two might give us a little bit of hope that maybe, just maybe, some sort of trade deal can be organized between the United States and Canada. And if that's the case, then maybe a trade deal can be worked out in general across the globe. But other than that, the market's got one other thing on its mind. That's happening tomorrow. And that, of course, is the Fed. Because, of course, they are going to be discussing interest rates. But realistically, the expectation is for them not to cut interest rates tomorrow. In fact, the CME Fed talk indicates in its I don't know, I can't get my teeth in today. Its expectation, or what its estimates say, that only 96.9% chance that the Fed will keep the rates the same. So I say that again, sorry, there's 96.9% chance that the Fed will keep rates the same. However, even though we're sort of pricing that in and that is sort of being expected, it's really going to be the press conference afterwards. You know, when Jerome Powell speaks. I mean, the market is going to be going through his comments and what he says with a fine-tooth comb to get any indications. And of course, he's going to be pushed on what you think the president will think about this. And as well as that, the market is going to be waiting for what Trump says as well. So that is going to be big. So that's something the market is also waiting for with bated breath as we speak. But I'll go into more of that, obviously, tomorrow. But yeah, that's it really at the moment. You know, it's more doubt that we're anywhere closer to this trade deal or any sort of trade deals, which is holding the market down. But anyway, let's look forward to tomorrow. Let's look forward to the Fed and the FOMC press conference. And on a lesser note as well, we've still got the Bank of England interest rate decision, of course, happening this week. Don't forget, this is a live show and you can talk to me anytime you wish, ask me questions, or share with me your opinions. Let me know what you think. And obviously, if you're watching me on YouTube, of course, and you like this sort of thing, subscribe if you like, hit the notification button so you know next time I'm going live. And if you enjoy this sort of content, by all means, give me one of these. It's nice to know that you like what I do. And the same if you're watching me on Twitter and you like this sort of thing, by all means, give us a heart if you like, make a comment. Let me know your opinion, because that's the whole point of the live shows is we can all engage and have a chat about our opinions on what we think is happening and things of this nature. On another note, I have noticed a lot of people do go back and watch the live shows later. They watch the recording of the live shows. So that's really good. I really appreciate the support all the time. If you are watching the recording and you do have a comment or a question, by all means, put it in the comment section below. I will see it. I will answer it next time I go live, which is practically every single trading day. Anyway, if there is no questions, not a problem. Not a problem. Leaves me to basically say then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.